Hi, and welcome to this week's look at the major news stories that have affected the markets so far. I'm going to cover four topics as usual. We're going to start with the S&P 500 making record highs, bit of good news for the US there. Then we're going to take a look at the US dollar, not having such a great time. Thirdly, we'll take a look at gold, and actually that's had a pretty poor start to 2024. And finally, with it being reporting season, an awful lot of Q4 reports coming out, we're going to take a look at one of our more popular stocks, and that's Tesla and what's happened to them since their results. So let's start with the S&P 500. Monday saw the S&P at an all-time high. At the time of recording on Thursday, we're around the same level with a peak on Wednesday of 4,903. Great news. There doesn't seem to be one clear driver, but eyes and ears are certainly turning towards the Fed meeting taking place on the 30th of January. That is going to be quite key. We're seeing, less confidence now in a cut in US interest rates in March. However, Christopher Waller, a member of the Fed Reserve, was last week optimistic to a degree in his speech that the 2% target of inflation could be reached and sustained in the US. There was a few mixed messages there, but that's certainly one of the positives investors seem to be taking from that speech. Projections of GDP will be quite key and be revealed in upcoming announcements as well. That sort of perhaps positive thoughts about GDP and the overall health of the US economy may be driving positive sentiments at the moment. So 4,900 seems to be the target, and we're looking for a close really over that. It does seem to be providing a little bit of resistance intraday, though how long that resistance lasts is still to be seen. Worth noting the Nasdaq also performing quite well, so a pretty good start to the year. That's despite obviously the tough market circumstances that have prevailed for quite some time over the last couple of years, for example, and no specific event really driving this. As I've said, we have seen some reasonably good corporate figures, admittedly, but this rise does seem to be based on overall confidence that US corporate life seems to be back on track. Now, we all know historically plenty of spanners can come out of the work, so don't get carried away. Don't forget your risk management techniques, and certainly the abundance of news coming out in the next couple of weeks is going to be key. Okay, so a pretty positive start for the US indices. What about the US dollar? Well, in fact, it's been declining after reaching some pretty good highs recently. Dollar buying does seem to return slightly after a brief pause. And again, some of that is down to talk around interest rates. The possibility of a rate cut in March has actually fallen from 80 to 47% this week. So again, a bit of uncertainty about what the Fed is going to do. January 30th meeting is going to be key. Take a look at the dollar against a couple of specific currencies. The euro dollar, well, that's up moderately. We're looking for resistance at the 1.0875 mark. That may well have been broken already, which could well lead to 1.0916. On the flip side of that, we'd be looking at support at 1.0822. Now, we do have the ECB meeting on Thursday, expected unchanged in terms of interest rates, but again, the commentary, the speeches that come out of that are going to be key, particularly for the euro. Taking a look at the chart, we see there's a new descending channel formed over the lows from earlier this week, and the price currently heading towards the upper boundary of that channel. Again, as I say, that ECB meeting is going to be key. So certainly have a look for the results, and as I say, the speeches afterwards could be quite key. We'll take a look at the Great British Pound sterling against the US dollar. A bit of an upward trend there. We're above the 1.273 mark currently. We were looking for resistance at 1.2714, which may well have gone, which might well indicate we could head towards a 1.2747 mark. On the other hand, we do have support at 1.2649, and below that 1.2596. This is largely due to the expectations of the Bank of England being one of the last central banks to cut its rates. In fact, we're looking at a 50% chance now for a cut, but that's May, whereas with others we're talking about March. So higher rates in the UK seeming to give sterling a little bit of a fillip at the moment. Also, new descending channel formed on the chart we can see from the early week lows, and again the price is approaching that upper boundary. And finally, we'll take a look at the US dollar against the Japanese yen. We're seeing some moderate declines there. The 148.00 settlement target has been broken. Strong resistance perhaps at 148.8. A breakthrough from there, we could be looking at 149.6. We're also seeing some support, 147.61, and below that 146.97. And the Bank of Japan actually kept rates on hold earlier this week, but the officials and the language that their officials were using seemed to signal that the negative rates policy is approaching its end. That could well have a big impact on the market because, as we're all aware, those negative rates have been in place for a very, very long time. Also seeing a new descending channel on the chart forming, and the price is currently in the middle of that and may well continue to decline. But as I said before, with all of this news coming out, all of these central bank meetings, don't forget your risk management techniques. Okay, we're going to flip our attention and have a quick look at the commodity market and gold in particular. And actually, gold has descended to a significant support level. It's not been the greatest start of 2024 for gold and gold investors. Obviously, historically, a very defensive market, a safe haven. Doesn't seem to be following through so far this year. In December 23, we had a high of $2,135 per ounce. But from January the 1st of this year, the price has fallen from around the $2,061 an ounce to $2,015 an ounce, a fall of about 2.3%. Now, perhaps it could just be a correction after the historical highs that we saw last year and could well be pulling back from overbought conditions as indicated by the RSI. We can see that on the chart. The chart also shows us that the price has descended to the psychological level of $2,000 per ounce, which previously provided us with some support back on January the 17th. Could well be looking to test those levels again. The price is near the important trend line. That's the thick blue line you can see on the chart, from which we may expect some support. Price action is also forming a consolidation pattern between the thick red line and the blue lines that you can see there. So it's going to be an interesting time moving forwards. And what can we expect, or what do we hope to see next? Well, talk about varying opinions across the market. This one stood out a little bit. JP Morgan analysts state that in 2024 the price will reach $2,300 per ounce as US GDP growth slows down and the Fed starts to reduce interest rates. However, they do suggest that's most likely in the second half of 2024. The first half, they're saying that a decline is actually more probable, increasing the chance of a bearish breakout from the current consolidation pattern. So that's one obviously huge investment bank talking about a longer term price target. What are your thoughts? Again, keep your ears and eyes open. We know gold and the price of gold can be affected by many, many other market events. Okay, and finally, we're going to take a look at one of our most popular shares as it is reporting season. I'm going to have a little look at Tesla. Now, we said obviously the industry is doing quite well, and there have been some pretty positive Q figures coming out. Doesn't appear that way for Tesla, unfortunately. They were down sharply after their last report. Pre-market indication for open Thursday of $195 per share. Closed Wednesday at $207. So we're looking at approximately a 6% decrease there. What happened? Well, mainly earnings per share came in at 71 cents. That was against an expectation of 73 cents per share. Quarterly revenue of $25.167 billion US dollars was also below expectation, that being $25.64 billion US dollars. There's also, they're saying, a decrease in profitability being reported. They're attributing a lot of that to the Cybertruck launch issues, but decreasing EPS, quarterly revenue below expectations, decrease in profitability being reported, and on top of that, they provided a cautious outlook for 2024, saying that the growth rate in production could be significantly lower than it was in 2023. They're saying that's because of the next generation focus, should I say, on next generation vehicles at the gigaplant in Texas. But it's quite a maelstrom of connections there, and none of those indicators are really what investors want to hear. Take a look at the chart and see if that shows us. Well, we can see quite clearly that the price has failed to return to the ascending trend that we saw is marked in blue that we saw in 2023. And in fact, the price we can see is continuing to evolve within the descending trend lines, which are in red. Now, if pre-market estimates are correct, a bearish gap is likely to form at the Thursday opening, which may well mean we hit that psychological level of $200 per share, in fact, go through it, which means that that level could well switch from support to resistance. The median line of the channel may act as some resistance, worth keeping your eye on that. I think it's fair to say the bears will probably try and force the price down to around the $180 per share mark. So not a great response to their figures. Certainly not performing as well as the indices. And we saw that actually towards the back end of 2023 as well. And if these sort of fundamentals continue to be negative, that red descending channel could well shape the price trajectory in the first half of 2024. But let's not forget, with somebody like Elon Musk at the helm, anything can happen. There could be some surprises round the corner. Well, we wish you luck for your trading in the week ahead. Bye for now.